everyone, I am Munna Gautam and this is our group member. Today we are here to give presentation on the implication of international accounting in Australia after the period of international financial reporting standard. In this presentation we'll cover these topics, and the presentation will talk about the changes that has been occurred in the liabilities, debt and also assets, which leads to the Australian accounting policies to the change accounting to the International Financial Reporting Standard. We'll also analyze the annual report of a company so as to examine the implication before and after 2005. Furthermore, we'll also focus on the contribution that how the adoption of the IFRS has been aligned with that of international financial accounting. Furthermore, the next topic will be covered by my friend Binita Rao.
Thank you, Muna. Hi, I am Binita. I am going to explain about the implications of international accounting. The main aim was to improve the financial performance in the organizations. Australia became the first country to adopt the International Financing Reporting Standard in 2004. The change in accounting standard will impose major modification in financial reporting that then before to the stakeholder. It was found from the IFRS increase the total liabilities by decreasing the equity in organizations, which decrease the surplus. It was also found that most of the companies which are listed, including medium, small size business, show the positive relationship between the IFRS. The change in the Australian Accounting Standard AAS to the International Financial Reporting Standard IFRS, despite the change in the surplus, equities, liabilities and assets. With this, the adaptations of IFRS has affected many other issues such as the intangible assets, process of disposable assets, depreciation, share of net profits, losses and retained surplus. Thank you. The next point will be told by my friend Akriti.
Thank you, Binita. I'm Akriti. So, for the comparison purpose, we have taken the example of Virgin Blue Australia and the annual report for the year ended 31st December 2004 and 2007 have been considered. These 2 years have been taken so that the effect can easily be identified and analyzed. While analyzing the figure in the company's annual report before and after the adaptation of IFRS, we found that there are various items which have been changed after 2005. The items which has been changed includes the depreciation, cost of borrowings, net gains and loss in the plant and equipment, and the benefits to the employees. Basically, two statements are considered for the evaluation, which are the income statement, which shows the transaction through which the income is earned, and the second one is the balance sheet, which will help in predicting the financial report of the organization. Thank you. Now my friend Faizan will come and continue in the annual report.
Thank you, Preeti. Now we are going to compare the different items in the balance sheet and the income statement for the Virgin Australia. So the first thing we'll look at is the liability and the amount of equity. So if we look at the annual report for the Virgin Australia in the year 2004, we can say that the current liabilities are 434 millions. And if we see the annual report at the after the adoption of IFRS, we can say that the liabilities are 731. So we can clearly see that the liabilities have increased. And from the annual statement, we can also see that the amount of equity is decreased like before and after the adoption of IFRS. And the next item which are affected after the adoption of IFRS is cost of borrowing. Now, cost of borrowing is related to the operational activities of an organization. By adopting the IFRS, we can clearly say that the cost of borrowing has increased. So this increase of the cost of borrowing clearly shows that because of the effect of foreign markets, and which is mainly due to the exchange rates, and this changes in exchange rate has clearly affected the profit of an organization. And the next thing is affected is the depreciation. The depreciation is one thing also which is affected by the adoption of IFRS. And next thing we're going to talk about is the net gain and losses in the plant and equipment. So the valuation for the gain and loss of a financial statement has been changed with the adoption of IFRS. So before the adoption, we record the net gain and loss of the plant and equipment on the historical basis. But with the adoption of IFRS, we calculate that on the basis of actual value of the assets. So next thing is the cost of borrowing. The cost of borrowing, we already discussed that. Now we'll discuss the benefit to the employees. So before the adoption of the IFRS, we do not record the benefits which are given to the employees. But with the adoption of IFRS, whether it's monetary or non-monetary, we are recording it into the financial statement. So now my friend Sumitra will conclude all this, and thank you.
Hi, thank you Faizan. Hello, I'm Sumitra and I'm going to conclude this presentation. From the above discussion, it can be concluded that the changes from the Australian accounting standard to IFRS have impacted a lot in the company for the gathering the actual view of the company assets and the liabilities. The analysis done through the Virgin Australia annual report of 2004 and 2007, the difference between the surplus and the equity of IFRS and AAS. And the changes after the adoption of the IFRS lead to the increase or the decreases various items of the company's balance sheet. So it can be stated that the IFRS show the positive results which will show the fair and the true view about the financial position of the organizations. Thank you.